Welcome to another episode of the Dope Podcast. I am Dean M. Chambers, and this is a podcast where we display other people's experience, expertise, and enhance your knowledge. This platform was created to help people combat the fear of missing out on opportunities. And also, it's a central place for you to ask your questions and to bring like minded individuals together and be inspired. So today I got a guest by the name of Jerome Young, goes by the Young Black Investor, and we're going to be talking about stocks today. So I've been following him on IG for some time now, and it's very interesting the things that he's posting. So I've been investing for many years, but I'm always a student, so I brought you on today to just deep dive into the stock market and just to give the audience some insight for those that don't really know about the stock market, how to get into it, the pitfalls, and just just have that conversation because a lot of people they don't really know who they can go to. So I say, you know what? Let me bring the who to you so that now you don't have to figure out how to do it. So that's the purpose of today's podcast. So Jerome, thank you for being here. I really appreciate it. Just want to acknowledge you for that. And before we get into your background story, I think people really want to know, like the one main question is like, what's the risk? And what was the biggest bag that you have lost and also gained?
You know what? My biggest bag that I lost was I didn't lose the money because I didn't sell, so it was unrealized loss. So 2007, 2009, if you remember the financial crisis, I had mutual funds at the time, and I was up to $25,000. Then I started getting my statements, and slowly I saw the numbers starting to drop lower and lower and lower, and I was like, by the end of it, I lost I was down about $12,000.
Mm-hmm.
Biggest mistake was not investing more. So the market, when the market's in fear mode, that's when you got to invest more. I didn't do that. I was 21 at the time, I was 23 at the time, and I didn't know what to do. So I did nothing, waited, and started to learn more about the stock market and investing. And I started to see the numbers slowly start to climb up. It took about 5-6 years for that to recover. So losing, yes, I've lost in not crypto. I've lost in marijuana stocks. I've had some losses in blockchain early on. So some of the riskier stuff, but it's like listening to other people like that. That's what gets you in trouble. Once I developed my own style of investing and trading, I was pretty much it, and I've been very profitable since.
Mm-hmm. I liked what you said when you said it was unrealized. That's something a lot of new investors don't know about. And if you could just speak more to that, what is unrealized?
So unrealized is when you're in your account, it shows that you're down a certain amount, but you haven't sold it yet. It's when you sell it when you actually have the realized loss, right? So you gotta keep that in mind. So if you're down, like I just mentioned, I was down about $12,000. It took some years for me to be in the green. So I ended up cashing out around 28,000. So I was like, yeah, so exactly, right? So it's, if you can hold, like my strategy is always buy and hold, because you can't predict what's going to happen in 2, 3, 4 years, but you saw what happened in 2020 and of March. Stocks were at all-time lows, right? And then they just stormed up and went up quickly. And for those that missed out, they missed out heavily on stocks that some stocks went up to double or triple in value from their low. So always an opportunity to buy when stocks are low.
Yeah, it's crazy because the time that you got into investing is the same time that I got into the stock market, but I didn't know anything. I didn't have anybody that I could fall back on for mentorship. And I was literally just an avid watcher of the stock market. And them times BlackBerry was booming. And that's when they're having a competition, BlackBerry and iPhone. And I was going to buy into Apple, but I was afraid because I didn't know what I didn't know, right? So I was just like, if I buy into this, what's the chances of me losing this money, right? And if I did buy, I'd be laughing right now. But because I didn't have that knowledge, I literally seen that day that it happened. I seen when Apple went from $400 to $200. And I was like, holy, this is crazy right now. But I didn't know. And then the year after, they split. And I was like, holy, like I literally missed out on that. So it's just crazy that we kind of started the same time and you seen that trend too. And you were actually in it, but you didn't pull out of it. Where a lot of people was like, they don't have the stomach for it to take such risks like that,
Exactly. That's kind of what's going on with crypto right now. Like if you're into crypto, like you got to be able to stomach a 40% loss or 40%, down in the market at any time. And that's scary for some people. Like even for me, like as I said, I have a stomach for it now. I'm not an emotional investor. I set my price targets. I know what I'm waiting for. So I'm not stressing. I'm not looking at my phone every day, like praying for it to go back up. Like I got time. You know, time is your best friend when you're young.
Yeah. Yeah, that's key. And what do you mean by emotional investor?
Well, some people when they invest in, because I'm going to speak on behalf of Black people, like especially for myself when I was young. Being an emotional investor, we have an attachment to money. We work really hard for money. We don't come from a lot of money. So when we are down in our account, like you feel it. Like,
Yeah.
I'm depressed, man. Like I'm gonna be honest. When I lost that, when I was down 12K, I was depressed, man. Because I'm like, shoot, like I worked hard. I saw the account go up, and then okay, now I'm down half. Like, what was all this for? I should have kept it in the savings account. So you know, with all the thoughts in your head, and you're like stressed out, and I'm like, damn, like, but as time goes on and you become more of a savvy investor, you understand like it's a long game. I'm playing the long game. Just like with like real estate, no different. The home prices, 20 years ago compared to now, right? You're willing to hold for the long term, and at the end of the day, you'll win.
Yeah, most definitely. What's funny is you said you were depressed. I almost feel like you were depressed then, but then you learned how to go through that trial and tribulation of a loss, or the pitfalls of a stock going down. Whereas other people, they didn't get in because they didn't understand it, but now they're kind of saying, I wish I was in it. Where it's like now they're depressed because they didn't invest 10 years ago, right? Because a lot of people talk about, even just let's focus on Apple right now. They're saying if you invested in Apple 10 years ago, you would have like $1 million. Like I feel that makes people more depressed than being depressed in the moment because they didn't buy into the stocks then, So it's crazy that you brought that up. Also, that which leads to my next question. What sparked your interest to get into the stock market?
Being down 12 grand. But to be honest, I graduated from Humber 2005, and my coworker, my first job actually I got, my coworker's like, hey, my nephew sells life insurance. If you want to, get life insurance and mutual funds. So that's what kind of sparked my interest. I would watch BNN and not understand like what all these symbols mean, and I was like, okay, I wanted to figure this out because I'm like, there's wealth in the stock market. You can really build wealth for long term. I started reading some books, Rich Dad, Poor Dad, Secrets of a Millionaire Mind, Millionaire Next Door. So I was just really just educating myself and learning. And then once I opened up my brokerage account and learning about the stock market, taking my L's, for you to earn money, you got to learn. There's no other way around it. So that's what really got me going. But I went to a school where it was predominantly Jewish, but there was a lot of wealthy people. And I was always trying to wrap my mind around how these people amass so much wealth. Yeah. And obviously is one way is through business, but they're heavily invested into the stock market. Yeah. But I'd go to some of my friends' houses and they'd be watching BNN. They'll be watching the stock market constantly. And I'm like, this is what you guys do all day? And I come back to my house and we're like, my mom's watching soap opera maybe or whatever, but it's like they're consistently learning. Like if you're consistently watching the market, you can learn so much. If you're on YouTube, if you're on Reddit, if you're on, even on Twitter and Instagram, there's people that you can follow that spit some really good gems and you can consistently learn. So that's what really sparked my interest in stock investing, is just learning about it, because for us it's foreign. Our parents don't talk about money. I could never talk about money. It's like taboo around my parents. So for me it was like, I always felt like that, that rare black gentleman that didn't get a chance to talk to anybody about investing. I didn't have any mentors until my accountant. My accountant was probably my first mentor. He told me to get this book and that book, and that's what really got me going, because I'm like, this guy's he's a young millionaire himself, and I'm like, I want to be like him. Like he lives in a great house in Richmond Hill. He drives a very nice car, but he's giving me the gems. So I was like, I took some of the gems that he gave me. I was very fortunate to even meet him and to know him. But that's kind of where I got my interest from.
That's crazy. That's crazy. Which leads me to my next question. Where did it go? What hurdles did you have to overcome to grow your portfolio?
First things first, not diversifying my portfolio. I think that was a pretty big one for me early on. And like I said, I mentioned to you about the blockchain and marijuana. Those are two mistakes that I made. Overcoming the emotional connection to money as well, not having a plan, understanding what I was investing in. I would invest in companies I had no idea how they made money at all, and those are the ones that burn, like the ones that you have no idea what they do. And for me now, it's like I look at it from a standpoint. If I can't explain it to someone that's like, let's say a grade 2 or grade 3, then I shouldn't be buying it. I understand how Apple makes money. We
Yeah.
all know how Apple makes money, how innovative they are, how they consistently put out new products that take market share over the entire market of tech. So those are some of the hurdles I think that a lot of people go through. It's like they kind of just invest in what people tell them to invest in because people are fearful to invest in their own companies. But sometimes doing your own research and finding gems out there. And to be honest, there's a lot of free information on Instagram. Like you can be on Instagram and learn about stocks.
Yeah.
There's certain people that I follow that they consistently put out really good information and they make you think outside the box.
Yeah. When researching a company, what do you look for in terms of saying, yeah, I need to add this to my portfolio?
I like to look at their 10-year chart. I like to see what direction it's going in, whether it's going up or down. I like to be in a company that's in the top 3 in its sector. So I don't like to buy the ones that are like, some stocks are cheap for a reason. So I'm willing to pay for Shopify because it's a good company. They're innovative and they're doing well. I know the price is high, but I would still rather invest in that than to invest in some company that no one's ever heard of. I also like to look at who's holding the company. So which institutions are actually involved in the company? Are banks invested in it? Is Vanguard or BlackRock, which are 2 big ETF companies, are they invested in this company as well? Because those are really good indicators for me to know that this is a good stock to hold for long term.
What's an ETF?
It's an exchange traded fund. So I like to say it's like a basket of funds. So what I've told some groups, I do some conversations with the Boys and Girls Club of Albion. I'm like, imagine putting together your own basketball team. Like you have your own fantasy basketball team of the best players in the world. Let's say you put LeBron, Russell Westbrook, Kyrie Irving, Kevin Durant together. It's no different than the stock market where you're putting the best companies together. So for some, the S&P 500, which is Standard & Poor 500, those are the 500 biggest companies in the U.S. So that's an ETF that you can follow. So you're investing in Apple, MasterCard, Visa, Home Depot, Walmart, all the big companies in the US, the best of the best. But then you also have ones that are sector related. So you may have some that are just real estate or just dividends, or it could just be a tech ETF. So there's different variations that you can get involved in.
Interesting. Okay. Thank you for that one. What advice would you offer to new stock investors?
I think personally people should start off with index funds. It's safe. They're tracked by the S&P 500, so it's already the products that you're probably using as a consumer. Why not invest it in it as well, right? Invest in what you understand. Buying a share should be like, you should feel like you're a part owner of that business. I don't think people should just throw their money into anything. You should understand the business, but like this is you have ownership of it. Like I posted the other day on Instagram, like my son owns Nike. He's a part owner of Nike. He had to make a decision to vote on a board member. Like that's some validation, and you feel important doing something like that. Don't chase a hot stock. A lot of people do that. We saw with the meme stocks, a lot of people got burned from that, right? You want to take your time, do your research, because at the end of the day, this is your money, and nobody should care more about your money than you. You want to limit your risky stocks as well. I think you should have some risky stocks in your portfolio, whether it's 5-10%, and that's pretty much it. And you want to decide on what kind of investor you want to be. Whether a combination of, like, for me, I'm a dividend investor, but I also invest in ETFs. I also invest in growth stocks as well. But early on, you want to figure out what direction you want to go in. If you want to go in growth,
your audio cut there. Now you sound like you're on mute. Don't know what happened there. Yeah, that's so my next question for you. Is this your only, so are you just mainly a stock investor, or are you also work a 9 to 5?
So what I also do is private lending. That's a big thing that I do as well. I do mortgages, and I deal with some businesses as well. I'm getting into rental properties. I have 2. They're not fully built yet. I have one here in Barrie, Ontario, and I have one in Kelowna, BC.
Oh, wow.
So I'm just trying to diversify more in real estate. So majority of my time is just spent on investing. Me and my wife have a little side hustle business where we do some woodworking together and we build stuff. We also do like Facebook. We sell on Facebook Marketplace as well. So we've got quite a few hustles. My wife's a nurse. I'm in the social work field. I really don't work as much though in the field. I'm primarily just sticking to investing because this is what's bringing home the money.
Nice. So how long did it take you to go from making the shift from the 9 to 5 more into the investing side?
Well, I started investing on my own in 2012. That's when I started. Took my L's definitely. I want to say 2018 is when I really started to be able to profit from the market. Even I would say 2019, 2020, I got into option trading. I'm not sure if you're familiar with that, but it was a really good way to make an income. Dividends, well, I got it more involved in dividends as well, but I would say 2018. So I would say it took about 6 years for me to really understand the market, but the information back then compared to now is like night and day. Like there's a wealth of information out there at our fingertips. Like
most definitely
a lot of money out right now if you are willing to learn. You're willing to take an hour out of your day every single day, just like going to the gym. Learning it has a compound effect, right? So continuously
habits, man.
Huh?
Habits.
That's exactly what it is, man. A little bit of learning every single day. And you'll see like you can really build wealth. I don't want to say quickly, but I want to say you can build wealth over time.
Yeah.
But just the information now, you can do it a lot faster than I believe you could have done like 5-10 years ago.
Yeah. The key thing you said is the habits. And that's why, shameless plug here, we started a savings challenge to get people to start saving money so that they can do something later on, right? So if somebody wants to invest in the stock market, purchase real estate, have vacation money, work backwards and say how much you want to have at a specific date, and then just break that up into increments, right? So it's like cutting out those Uber Eats or the Netflix so that you can put towards purchasing Uber now or purchasing a Netflix stock so that now you can see it grow over time, right? So that's why we launched the savings challenge, not just to save and sit there and do nothing, but save with an intention, and your intention to invest, whatever it may be, so that you're kind of not waiting till the last minute and then you get the FOMO and then you're like, oh, I need to buy into this, and then you don't even have the money to do it. So it's like, why do you want to buy into something and you don't have the money to do it, right?
Well, you said their habits. Habits is a really big thing, obviously. Once you have good habits, they continue for a long time. But also goal setting. Goal setting is essential. A big thing for me, to be honest, on how me and like my wife really started to really build wealth was paying off debt. Like we went after we got married, we just started paying off all of our debt. Like we paid off all of our credit cards, we paid off our lines of credit and everything, paid off our cars. We were just we kind of like lived as minimalist, but we wanted to get that out because debt is, deterring you from really building wealth if you think about it, right? So that's why I'm saying like what you're saying about the habits and the goal setting. We wanted to pay off our debt, and once we did that, we were able to put so much money into the market. And the key thing is, so I don't know if you watch some of my posts on regards to like getting to 6 figures and how important that is. Once you get to 6 figures and you do a 1% return in a week, like that's $1,000 that your money made for you.
Yeah.
This is the key thing. That's why I'm like, man, like I push everybody I talk to, get to 6 figures, get to 6 figures. And I know it's hard. I'm not saying it's easy, because it's definitely not. I'm going to tell you, it took us time to get there. But once you get there and you understand, like, holy, like money really, like the compound interest and everything, like it moves. You know what I mean? It's like we can really start to build wealth. And at the end of the day, it's our kids are going to benefit from the decisions that we make. That's what we think about.
Yeah. It's funny because a lot of people, you present them an opportunity where they can make 10-20%. They're like, nah, that's too little. And I was like, are you crazy? And it's like, what? And I have that same type of mindset that you have, where it's like, yo, if I have $1 million, I'm making 1-2%, I'm good. But them, it's like, you're getting them 10-20% on 10,000, 20,000. They're like, nah, that's too little. And it's like, how much do you want? Like, you want like 300% return? Like, nobody's going to give that to you. And if you do want a 300% return, your risk is that much greater. Like, you got to put in something that's going to give you that type of thing. But it's if you don't calculate your risk, then how are you going to know that you're going to even get that type of percentage, right? You might as well go gamble, go to the racetrack and go bet on a horse, right? But a lot of people don't have that. They haven't trained their mind for those things, right? And same thing that you preach. It's like, yo, just start, because eventually you'll get there, right? Especially if you're in the same room around those type of people, you're gonna be like, yo, if that guy could do it, I could do it.
Mm-hmm.
And then, or you're gonna ask the question, how did you get there? So that I could do it. And then you kind of just broke it down where it's like, yo, you live like a minimalist. Where it's like some people would rather rent a 3-bedroom house instead of living in a 1-bedroom apartment, thug it out for like a year or two so that they can have enough bread to go buy a house or invest. But it's like, nah, I don't want, like, they won't give up their lifestyle. No. And it's like, how do you expect to achieve these things if you don't give up your lifestyle? How do you expect to achieve this if you don't want to fix your credit? How do you expect to achieve this if you don't want to pay off your debt? Like, your debt is surpassing what you're making in the stock market. That doesn't even make any sense.
That's a bar right there, man. It's called delayed gratification, man.
Oh my goodness. You know what's funny? I literally have a whiteboard that says delayed gratification. Literally.
That's my saying. That's my saying. And in regards to your point about people wanting to make like 100, 200% gains, I have a saying. Just like for me, I look at investing like baseball. I look at trading like baseball. I'm okay with a 10, 20% return over a short-term trade. I'm okay with that. I don't need to hit home runs. I'm just going to be consistently hitting base hits because I'm still going to get runs.
Yeah. Everybody wants the grand slam and the home run. It's like, and to be honest, I have gone through that as well, where I've too have lost. Well, not even just, it's a bit different to your scenario. I actually lost like $9,000 in, like, not the stock market, but Forex, because I didn't have that knowledge, where it's like, I'm looking for the big bag and it's like, yo, the big bag's not coming. Yeah. That's why if we could talk about this, the difference between a trader and an investor, that's where I think a lot of people get things confused.
For plain and simple, investor, you're buying and holding. You're buying and holding for the future. Mm-hmm. Trader is, you're basically finding an entry point and an exit. That's it. Mm-hmm. So for me in particular, I like to minimize my risk. Mm-hmm. So I look at it from a point of view of if ABC stock is $10, if it drops to $9.80, I'm going to sell it. That's going to be my stop loss. Mm-hmm. Right? But if it goes up to, let's say, $13, well, I want to profit. So I'm going to put my stop loss at, let's say, $12.80. Mm-hmm. So I'm guaranteed to get profit. So trading is, you're basically just getting small profit over and over again. And that's what the goal is. Mm-hmm. But as an investor, I'm just looking at it from a long-term point. I don't need this money right now. I'm going to put this money away. You know, if I come back to it in 5-10 years, if I need it for any particular thing, which I don't want to, because I'm trying to live off my dividends. Like, that's one big thing that I read. I read one book called Get Rich with Dividends. And it opened up my mind to be like, man, I can pay my bills with dividends and I can do all this. So I'm like, shoot, I'm just going to keep putting money towards it. I'm going to keep buying Enbridge. So Enbridge can pay my Enbridge bill. I'm going to keep putting money into TELUS. So TELUS can pay my phone bill eventually. So I don't have to worry about these bills because the stocks I'm invested in. But that's more for a long-term investor. That's my mindset there. But for trading, it's just, you want to get in and out of positions, but you want to have as I said, you have to have your entry and your exit. Most people they buy a stock, they see it go up, they get excited, they don't sell. They don't even sell half their position or anything. But then when it gets back down, they're like, oh shoot, like what am I going to do now? I should sell. Why would you sell at a loss?
Yeah. It's like reverse engineering. It's like, exactly. You're doing everything backwards. Like, no, that's not how it works, man. It's like, if it goes down, buy more. Exactly. So that when it goes up, now you get the bigger bag. But a lot of people don't see that. Even it's funny that you brought up Enbridge, because I too have Enbridge. And when you posted your dividends, I was like, whoa. I was like, that's a lot right there. I was like, yo, I need to step my game up now. So I was like, okay. Like, literally when I seen it, I was like, who knows how long you've been investing it, but it just shows that you had a mindset where it's like, all right, I have an Enbridge bill, but if I buy Enbridge, they can eventually pay my bill. So it's like, how much do I need to make, or how much do I need to invest in order for Enbridge to pay itself back, where it's not coming out of my pocket? And I believe that's called dollar cost average.
That's right, dollar cost averaging.
Yeah, if you could speak to that, what the dollar cost average? I know you posted it, but yeah, just to let people know, if this is the first time they're seeing you and hearing this, what it is.
So dollar cost averaging is, you're basically buying it at different points, right? So we can use Enbridge as an example. It's $51. So Enbridge last year, around this time of the year, maybe in October, it was around $36. So I just bought because I'm like, this is pretty low. I'll buy Enbridge right now. If it goes up to $40, I'll still buy. So you're buying it at different price points, right? But at the end of the day, you're going to have an average because it's going to be average of your lows and your highs all together, right? So I think we have about 301 shares, but I have friends that have 5,000 shares of Enbridge. So when they show me their dividends, I get excited. I'm like, damn, okay, I need to get to 1,000 and then 2,000. But I'm like, it adds up over time. Once you get your dividends, you put them right back in, which is called, some people have drip, but I just put mine right back in, and I'm like, I don't need it right now. I'm like, maybe in 20 years I'll take out the dividends and take care of whatever. But seeing someone with 5,000 and seeing their dividends, it's an eye opener to be like, man, money is really a tool to make more money.
Yeah, yeah.
Like
Snowball it.
I don't believe in savings accounts. Like I stopped putting money in my savings account. I put everything in towards the stock market, man. The stock market or crypto. Like I keep money in my checking account for day-to-day stuff, but other than that, like I believe everything should be invested.
Yeah, yeah. Let that money work 24 hours a day, 7 days a week. It doesn't eat, doesn't sleep, nothing. So literally just put it to work, wherever it may be. It's like, for me, I'm always looking for that opportunity. And you kind of sparked my interest when you're like, you do private lending. So I was like, oh, okay. I'm looking for a private lender. So after this, we could talk more about that, about the private lending, because I too like to dibble dabble into real estate. So that's kind of where I feel like my passion is. I do like the stock market. It's just when you're doing so much, it's so hard to focus on that. And within your portfolio, how many companies do you really watch at a time? For me, I read this one book. I was watching like 50 stocks at one point, but I was like, yo, this is too much. And then hearing Warren Buffett, well, not so much Warren Buffett, but there are like big investors where there are 10 bread and butter companies. But for me, it was just like, yeah, 50 companies. If I buy a little of each of these, but I found that didn't really work too well for me, because now I got to track all these companies and kind of keep up with them. So what's like your sweet spot for how many you have in your portfolio?
For holding, I probably have about 20, 25 right now. That includes index funds. But in what I trade, the max I do is 3 or 4. And I simplify it. I'll set alerts. So if I know that Enbridge dropped 10%, I'll know it, because I have a Yahoo Finance. I have their app. And I use my Sundays for that. I use my 1 hour on Sundays where I just look at stocks to buy, like undervalued stocks, but I'll also set up my portfolio for all my alerts. So I'll have, it's almost like my alarm clock. I have like maybe 20 alerts. So if a certain particular stock that I love drops to a certain price that I think is a good entry point, I'll wait. I'm willing to wait on those ones to add to my portfolio. But in regards to trading, I have my entry price. So once it hits my entry price, I'll watch it, and then I'll buy, and then I'll have my exit price. So I'll set an alert for that as well. So let's talk about Nike. If Nike's at 160, and if I believe it's going to hit 170, then I'll put my alert at like 169. So I'll be prepared to sell it if I need to. So you can simplify it, because I honestly, looking at your phone all day will drive you crazy, seeing the numbers go up and down. So instead of me doing that, I'm like, okay, let me simplify this. Let me figure out a system which works for me. So I got a pen and pad too. Like I'll write down all my alerts so that I know, and then it's set up to my phone as well. So I'm like, I'm good, man. As long as I get that notification, I know that I'm either going to buy or I'm going to sell.
With the trading, how do you know where your exit and like, so your take profit and like your stop losses? So how do you, well, the take profit, like what do you set, like how do you determine that?
I use indicators. So I use an indicator called the 200-day moving average. So it's the last 200 days of a particular stock or whatever price it ends at, and that kind of shows you it's a patient game. So because usually the number always comes back to the 200-day moving average, no matter what the price is. So this morning I was looking at TD. I'm a big fan of TD. I think they got a new CEO, so the stock's been gotten beaten up the last few weeks. And the 200-day moving average is $80, $80 and like 20 cents. So I'm waiting to get in at that point. Right? Another indicator that I use is RSI, which is relative strength index. This lets you know if a stock is overbought or oversold. So if a stock is overbought, that means there's more buyers than sellers. If a stock is oversold, that means there's more sellers than buyers. Obviously, if there's more buyers, the stock price will keep going up, because it's all about supply and demand. So I kind of determine, like, and you'll see too on some of the companies, you'll see that they have like a target price as well. You can utilize that if you want. I like to go under that. Like, like let's say TD stock price is their target is $92. I may say, you know what, when it gets to 90, if I'm doing a trade, but because I'm buying and holding, I would just rather just buy it at $80. So if like I've been buying it, I've been dollar cost averaging anyways, but I know that $80 is like their bottom, and then from there they should start to go back up, right? Because Canadian banks are, you see the 10-year chart, right? Like they continuously go up, but you have to be patient and willing to wait to get to your exit price. There's like no rush. The stock may drop 10 more percent, but if you're in it for the long haul, you can obviously make profit if you're a trader or if you're a holder.
Yeah. In regards to option trading, so if we can touch on that, like how do you go about doing the option trades?
Option trading is, if you're doing American stocks, it's very volatile, but you're risking less money, right? To make more. So you can do what's called call options, or you can do a put option. So call option is that you're bullish on the stock, thinking the stock is going to go up in price in the future. Whereas having a put is you think the stock is bearish, meaning it's going to go down. Now, let's say I believe that Apple's going to, I'm not sure what the price is today. Maybe it's like 160, I believe. Do you know the price of Apple?
Around 150. I stopped looking.
Let's just say 150. So let's say it's almost like a bet, right? So let's say I think Apple's going to hit 152 by October 13th, let's just say, right? So if Apple does go above 152, I'm going to be in the money, meaning I'm in the green basically, right? But how options work is you're basically getting 100 shares of the company. So if you have the right to buy that 100 shares, so it's almost like you're the middle person. Are you familiar with wholesaling?
Yeah.
That's kind of the analogy I like to use when I talk about options. So if there's a house for sale for 500,000, let's say you have this house for sale for 500,000. I say, hey, you know what? I'm going to come to you and say, hey, I'm going to buy your house in cash for 500,000. Right? Mean you have an agreement. Let's say give me 60 days to do this. I'm going to find someone else that's willing to buy your house now for 600,000. As long as you get your 500,000, you're fine. You're happy. Right?
Yeah.
I'm going to get that middle money. I'm going to get that money that's in between. That's kind of how options work. Right? So there's a contract date, and as that gets closer to the contract, you have the chance of losing your money. It is risky. I tell people, do guides. There's a lot of good content on YouTube, but there's a few courses that I've taken too in regards to options. So don't feel ashamed to take courses, because I think people need to learn. Like, this is important. Like you can turn $100 into like $800 in a day if you trade options during earnings season. With the earnings, right? I'm not sure if you're listening.
Yeah.
That's advanced. I don't even know, but earnings is a very volatile time in the stock market because there's a lot of speculation, and if companies have a good earnings report, then their stock can skyrocket.
Yeah. Question for you. So, what is one bad habit that you have given up when it came to getting into investing?
Cutting my losses and having an exit strategy. I think that was a big one. Sometimes we just let things go and just think, it's going to go up. Even when you're up on a stock and then it goes down, and you just kind of leave it and you see it slowly going down, and you're like, maybe I should sell it. Maybe you definitely have to have a plan. If you're going to put $1,000 up in regards to trading, you want to keep your eye on it. Because if it's the same skill that can make you go from $1,000 to, let's say, 1,300. If you have 10,000, it's the same exact skill. It's just more money you're playing with, right? So always have an exit strategy. I'm really proficient with that. Like as I said, I set my alarm so that if a stock's going the other way, I'm gonna exit and I may re-enter in a different position, right? Another thing too is taking profit. Profit unless you're holding it for long term. If you're doing a trade, take some profit, right? Because some stocks, they run up and then they taper back down. Like, you got to remember, in this market, the whales control it. We are just retail investors or retail traders. It's the big corporations that are putting in the billions of dollars. They have they basically control where a stock goes at the end of the day. So you cut your losses early. A lot of stocks have run up and gone up, and people have held it. So they were in profit, let's say like 20-30%, and then now they're down 20-30%. So, and it can happen just like that. Like, you remember what it was like in March when everything was just dropping and everyone was going crazy. And getting toilet paper. Out of all things, getting toilet paper. Not going on the stock market to buy Nike or anything. I put out post after post. I'm like, yo, go get Nike. Nike is $60 something right now. Buy Nike, because I'm like, can you buy a shoe on a Saturday? Can you buy the latest Jordans on a Saturday? Absolutely not.
It's
You won't
true.
have any chance of getting it. I've tried it several times. Like me and my brothers were flipping shoes at one point, and I could never get shoes online. But I'm like, why is Nike's price going down though? This doesn't make any sense. Like they're selling shoes in seconds.
Yeah. It's funny. Back to what you said in the beginning, like buy stuff that you know. And last year, knowing that we're in a pandemic, it's like look at what's happening around you. Like if people are being locked up inside, what do you think they're gonna buy the most of? And one of the companies that I bought, and I don't even think anybody really was looking at them, was Hasbro. And Hasbro makes board games. If you're at home all day long with your family, what are you gonna do? Play games with them, or you're gonna buy the toys like to keep yourself entertained. And literally, that company went up; it doubled. I was shocked when it doubled in price. But like, those are the type of things that you need to be looking for to have that competitive edge against people, right? And I don't think a lot of people are doing that, where everyone's just going for the Google, the Netflix, whatever it may be, when the price is high or whatever. But sometimes just looking at those little things can be like a window of opportunity for you.
I'm gonna give you a quick gem, man. Smart Center. I'm heavily invested in Smart Center.
Oh, the REIT. Them and what's the other one called? Not Smart Center. I think the guy, the CEO is David. The other that owns the plazas and stuff, like they own Cineplex and
RioCan or Choice.
RioCan, that one, yeah.
I own both of them. I've owned RioCan since 2012 as well. I still own RioCan.
Yeah.
But in regards to Smart Center, every time I go to Walmart, parking lot's always full. I always see this penguin sign. I'm like, man, I got to figure out more about this company. But I'm looking at Smart Center and I'm seeing, okay, there's an LCBO. LCBOs don't close. Beer store, Dollarama. There's maybe a Chapters. There'll probably be two banks.
Yes.
Maybe C Scotia or whatever. There's always banks there. There's always like restaurants, and there's a competing like supermarket, like let's say Sobeys or something else as well in that plaza. There'll be a bulk barn. So you have all these staples, and the parking lots are always full. So more and more, I'm wrapping my head. I'm like, why am I not investing in this company? But if you drive up north on the highway on the 400, you'll see signs. You know, they own land.
Yeah.
I started to dive in, went on their website, looking at their financials, seeing what they're doing in the future. All this information is out there and it's free, you know. So I started to take advantage of it. Started investing heavily into it. Now they're building apartments. So if you go to Jane and Highway 7, they own like 4 hectares of land there. They own that whole corner.
I didn't know that.
Yeah, I didn't know that either. So that's what I'm saying. Wow. So they own all that
no,
land.
I know what you're talking about, right where the
subways, where
the subway station. Yeah. I seen their sign there. Yeah, they have everything over there.
They own that whole property. But I'm like expanding in different cities and areas as well. So I'm like, man, this is a great REIT. And I'm like, it's undervalued. And I was pushing it on Instagram. I'm like, hey man, look at this. You know, like the thing with me and what I post is if I'm posting something, I own it because I've done the research and I'm like convinced in it. Like I'm not gonna put something I do not believe in. Like I really like, you know, like most of the people that follow me are friends, family, or whatever. I'm getting a lot of new followers now, but I really want to help people build wealth and like look at the big picture. I'll put information out there and even explain it so people understand it, right? So when I think TELUS, they were looking for an offering because they wanted some money to expand their 5G network. I was explaining to people they're looking for a loan, but this will help them make more money in the future. So it's no different than any business of us starting a business that we have that's doing pretty well, but we want to expand. If we want to expand in different cities, we need to get more money to start that, right? So just breaking those little things down because, like you said, people don't understand and they're not thinking outside the box. They're in their life and their situation and whatever problems or issues they got going on, and that's kind of all you see. But you know, I'm gonna be honest, man. In regards to like building wealth, man, money will take care of your money problems. Everything else you got to work on. You know, if you're overweight and stuff, you got to work out. You got to do what you need to do in regards to nutrition. But you know, you can even your mental health. You got to do whatever you can for your mental health. That's one thing. I don't like stress because I trade. I can't have stress around me. So if people bring that stress talk to me, I'm like, yeah, I can't hear it. I'm being dead serious, man. Because for me, it's a mental game. It's a mental game, man.
It's like fruits. If you put fruits together and you have one spoiled one, it will spoil the other ones. So it's like I can't be around you. Like literally. As you said that, I was thinking about there was 2 oranges on in the bowl, and one spoiled, and then it started to get onto the other one. The other one was fine, but it's like the moment it was beside that one, boom, it started to go bad as well. So it's like You don't want that type of energy around you, because if you have that energy, now you're going to start thinking like them. And negative energy has 10 times, it has 10 times more effect than positive energy does. And especially growing up in the hood, like, yo, if all you see, like, literally that's all that's going to happen, right? You have that one person that's telling you, no, no, no. But then you have the 10 or even 2 people saying, yeah, let's go do this. And then you end up doing stupid shit, right? So it's similar when it comes to fruits, like literally, like you just want to just negative energy, stay away from it. I seen a post. It's like, you got to make your circle smaller. Like, yeah, that's your brethren or whatever. But if your brethren's not doing the same things you're doing or trying to get you to that next level, you got to cut them. Like, love them from a distance. Like, at the end of the day, you're trying to build something for yourself. They're trying to do whatever they're doing. If it's partying, going clubbing, let them do that. You go work on what you need to work on.
Big facts, man. I always say to people, man, if people that you have around you should align with your goals. Whatever your goals are in life, they have to align with that. If they don't align with it, then you don't need to be around them. Like you said, I can love you from a distance.
Yeah.
If I see you on the road, yo, what up? Everything good? Okay, cool. Yeah. But other than that, like like you just said, like I keep my circle very small. I bring value to you, you bring value to me. That's how we work. Period. If you suck my energy away, then I can't have that, because this is gonna affect my family. It's gonna affect my wife. It's gonna affect, and I don't need that, man. So
yep, most definitely. It's crazy about that. So this brings us to the fun part of the show, where we talk about the do's and don'ts of stock investing. Yeah. So if you just want to just shed some light, so just like maybe 1, 2 do's, 1, 2 don'ts, just so that people can at least note this down and start doing their homework,
Definitely, man. I got some good do's, man. I can give you a list, man, if you want.
Well, I want them to sign up to the Patreon so that they can get the full list. So just give them little teasers as to what they can expect, and I think a lot their eyes will open once they just put these things into practice.
Well, I did mention one of them, which was zoom out on the charts and look for direction. I think that this is like essential. You have to know you have to see where stock is and where it's going. Like, that's obviously you're speculating. You also want to invest in the top companies as well. But look at the direction of a company. I like to look at it. If it looks like a hill, I'm most likely going to invest. Right? You're going to have the turbulent times where it goes up and down. That's fine. Whenever there's a sell-off in the market, you should definitely expect it. But if the overall theme of this company continues to go up and they're continuously trying to expand and build and go into different countries, then those are companies that you definitely want to invest in. And you want to don't? All right. Do not invest in the hype. The media is not your friend. I need people to really understand this, because a lot of people will send me articles from like Motley Fool and all these other like companies, and I'm like, what interest do they have? Their interest is basically getting your eyeballs onto their page. That's it. So that their advertisers can give them more money. Oh, I have 10,000 people that look at my site every day. That's all they care about. They do not care about you. So they're just writing up any article. If they were extremely wealthy off of trading, if they knew what they were doing, they wouldn't be wasting their time doing this. So really, it's just what's that word? When people try to get you, it's just like clickbait. It's just basically clickbait. They have the nice little title, makes you open your eyes and be like, oh, this is a good dividend stock I should invest in. Now, don't get me wrong. Sometimes they do get some good ones, but most of the time they really try to persuade you. I'll give you a perfect example. CNBC. I open my phone every single day, and that's the first app I go to see where the market's going, what's happening in the pre-market. With Bitcoin, oh, don't buy Bitcoin. It's a scam, blah, blah, blah. You're going to lose your money, whatever. Now they're saying, oh, JP Morgan, all these big banks are investing in Bitcoin now. So they're basically just doing this to the market. They know how to get to the retail investors or retail traders. They know how we function. Like, they know they can say whatever they want. Look at what's going on with COVID. Like, they can say whatever they want. Like, COVID's airborne. Oh, everyone's afraid now. We got to wipe up all the surfaces. Like, the media has so much control over us, and it's scary. Like, I don't even have cable. So I hear everything after from what people tell me. But the media, that's one thing. Like, you need to do your own due diligence and do your own thing. Don't listen to what the media is telling you, because they'll feed you the wrong information. And at the end of the day, you should be blaming yourself. You cannot trust the media. I'm sorry.
They're also biased.
100%. 100%.
They're also biased. So if they want you to think negative, they will make you think negative. It's like literally
promotion, man. They know exactly what they're doing.
It's like turn your TV off. Like at one point I was like, I was fed up more so with cable, not the nonsense that they're feeding me, because it was just the prices just gets higher and higher. And I was like, Rogers and Bell are both publicly traded. I was like, yo, these guys are making a bag off of me right now. And you always notice you're always flipping back and forth between the two companies. When one pisses you off, you go to the next one. It's like it's just unwritten. Like literally, I probably went between the two of them 4 or 5 times in like the last couple of years.
Yeah.
It's like you piss me off, I'm going to your competitor now. But the prices just continuously go up. So I was like, you know what? Be smarter than them. You only need internet. You can do all the same things you can do. If you really want to watch TV, buy an Android box. It's just as simple as that, right? But at the same time, if you want to get ahead of in life, turn the TV off. Pick up a book. Start researching. Start educating yourself. That's how you're going to get ahead of the game. So Jerome, I really appreciate you for being here, dropping the gems on myself and the audience out there. Just let them know where they can find you on social media. I'll also put your Instagram handle in the description and also on the video so that people know where to find you as well. But just throw it out there.
All right, man. My Instagram handle and Twitter is Young Black Investor, YNGBLK Investor. I usually answer my DMs if people have questions. So follow me.
Yeah.
Next over stripes. I love what you guys are doing, man. This is something well needed in the community. The discussion of money and Black families and just families in general. So essential. I really do love what you guys are doing, man.
I need one of those T-shirts, man. I really like it.
I got you, man. I got you, brother.
Yeah. All right. So once again, that's another episode of the Dope Podcast where we display other people's experience, expertise, and enhance your knowledge. Look out for the next episode. Thank you.